Will HEX be the next big thing? Well, we are going to do a two-part series on HEX. Part one, today, we're going to focus on the current pattern position to see if it's likely going to double in price again. And then in the second part, we'll really look at very high probability ranges where it's likely to go because there's a particular pattern that is demonstrating from a psychological buying and selling behavior perspective. And we are going to look at that in detail using Elliott waves and Fibonacci ratios. So if you like today's content, like, subscribe, hit the bell notification. If you don't know me by now, my name is Jiggy. I'm the award-winning author of The Extraordinary New Venture Capital Opportunity, How to Invest Like a Pro. Been featured in the best-selling book, High Probability Trading Strategies, back in 2008, where I only used to focus on currencies, but now exclusive on cryptocurrencies. So you've asked for HEX, I'm going to bring you HEX. Let's dive straight in. All right, so HEX on the website. What's really impressive is they've seen some great price action, but the marketing is very strong. So, you know, they're building Post-Chain, which is a fork of Ethereum, and the marketing is phenomenal. Like this is, and it plays a big deal. But what we're going to pay attention to today is the numbers, right? So some of the numbers that we're looking at on their website, I've double checked this on CoinMarketCap. It seems to be accurate. 14 cents, $82 billion market cap in itself. This part, I think this is this all-time high. It's not currently that, I don't believe. But what we're really going to look at is the price action, because even when we scroll down further, we can see they've just got good marketing. You know, good marketing, been publicized a lot. And marketing is important for projects, right? Because it needs users, needs buyers, needs people to believe in the project. So HEX is very interesting. But the beauty of technical analysis is we can ignore the fundamentals and look at the psychology of buying and selling. And this tells us everything we need to know more than the fundamentals. In essence, when you're buying a project and it's young, in its early days, when it hasn't really taken off, then it's more around fundamentals, right? Marketing, fundamentals, tokenomics, utility, team. You know, there's going to be a lot that you want to take into account, which is really down here. But once we've got some good price action, a nice move to the upside, we've got volume, we've got movements now to the downside, we've got volume. Now we can see what is the psychological mood of this particular crypto. So that's what we're going to look at today. So today's focus, so we're going to do this in two parts. Today's focus is going to be really, is HEX demonstrating any clear pattern that gives us a clue of what's likely to occur next based on how people are feeling, based on the buying and selling behavior that's occurred in the past. And then in the second part, we're going to go into detail on where is it likely to go if it does take off again, because it's had a nice big correction. Like it's gone from around 50 cents and to as low as pretty much 10 cents. That's like an 80% pullback, which is actually quite normal and healthy in lots of crypto markets. So let's just look at this. So the first thing you need to know is markets tend to move in 5s and 3s. And what I mean by that is buying and selling behavior tends to move in 5s and 3s. And the market is always expanding or contracting, expanding and contracting. And this one, we're anticipating that it's going to expand again. So let's just look at this. I want to draw a couple of things just so we get the thinking correct. Is we don't need to get too anal around the movement to the upside, but we've clearly had a movement to the upside. And then we're looking like we've got a big move to the downside, right? And it looks like 3 waves, right? 3 waves. And when I'm looking at this, this is a completion of some type of 1, 2, 3, 4, 5, and some type of A, B, C, right? So 5s and 3s, that's what we're looking at. But then when you see the 5 and the 3, what you do is you do a count on the upside and a count on the downside. And what I mean is if you've got a 5-wave sequence to the upside, it's of a wave 1. So we're calling this a wave 1. And then you've got an A, B, C correction on the downside, and we're calling this a wave 2. So the thesis of why we're even looking at this is after a wave 2 comes a wave 3. And that tends to be the most impulsive wave. And we will focus on that in part 2 of this HEX series. I'm just going to do it in 2 parts. But what we're going to focus on today is really this part here. Is to go, is this a high probability end of wave 2? Is it a high probability end of wave 2 zone, price zone, pattern zone? Because what we're going to use is Elliott wave and Fibonacci. And by the way, if you want to learn really about the art and the science of Elliott wave and Fibonacci ratios, take my free Elevate Fibonacci Masterclass in the link below. I cover the 3 key rules that you must know so you can read these markets. But now we're going to actually jump into it and let's dive in. So the main thing is we don't need to get too anal on this part of the count. All we need to know is we've got a nice move up and we've got a big correction. So this here is really, really important, and we want to label this as what's looking like a wave A, a wave B, and it looks like some type of wave C forming. And we'll get into the details of that in a second. Here I want to write what looks like a nice wave 1 to the upside, and then down here I'm going to write a wave 2 with a question mark. We put a question mark because we don't know. We can only do probabilities, never certainties, and most people lose in the game of crypto tennis. Call it crypto tennis because it's winners and losers, right? It's a zero-sum game. And what we're trying to do is get the edge in our favor. So most people are 2 steps behind the market. We want to be 2 steps ahead of the market. Really, really important. So now let's just look at this. This is the thinking of the pattern position. So you go, great, got pattern position. I'm happy with that. Looks clean, looks clear, looks relatively obvious. Relatively obvious now that we've drawn it out. And just so we're both on the same page, this is what I'm talking about as a potential ABC correction. ABC zigzag corrections are one of the most common and one of the most easy to identify. So now we're going to just go into a couple more things. Let me just get rid of this again. So now we're going to use Fibonacci ratios. So the first thing we want to look at is the macro. And the macro means wave 1 is a macro wave count on this particular chart, and wave 2 is a macro. So what I want to do, I want to use a tool called Fibonacci Retracements. Fibonacci Retracements, we just take the low, and I'm using closing data, daily closing data, and the high. Bang. All right, so typically a wave 2 will pull back 50 to 62 to 78.6, and this is the typical most common range, and it's a zone. It's literally like it gives us a feel for what's likely to occur. This is one of the most basic Fibonacci tools, but we can see that it's pretty much at the 78.6% maximum zone, so we want to be aware of that. So that just tells us if this is a wave 2 correction, it's reaching its price extreme, right? It's reaching its price extreme. Now what we want to do is we want to do an intermediate wave projection. And the intermediate is basically this wave A, B, and C. And this wave A and this wave C have a direct relationship with each other. And there's a common typical measure of the two. And that can give us a massive clue on if this is likely to be an end of a wave 2. So let's have a look. So the key ratios, there's a couple of key ratios, but the 2 main ones is 100% and 62%. And what I'm looking for, in fact, let me draw it to the side, just so it's even clearer. I'm going to draw it to the side. So I'm going to measure the wave 1. And I'm going to project it from the top of wave 2. And you can see that 100% is right away down here. But when I click on the cog, I also want the 62%. And you can see the 62% is really, really just overlapping the 78.6. That is really significant, really significant for us. So we go, okay, we got 2 degrees of Fibonacci ratios. We can do more, but this is more than enough for what we need so far. And now what I want to do is pull momentum into account. So I use something called Stochastics Rsi, and there's a few different settings, and we want to get quite precise. And this is to help us with our entry point if we are looking for an entry, because we see a move to the upside already. So we're going to look at this and we go, okay, it's best to get your positions ideally when the momentum is in the lower half. It's called oversold, lower half. So at the moment it's overbought, which is in the top zones. We want to be patient for the next bullish reversal and then reevaluate the pattern. So now taking that into consideration, it gives us clue, right? It gives us a massive clue, because this is the art and the science of reading the charts. Sometimes it's not so obvious. That's why I created the Fibonacci Elevate Masterclass, because it breaks a lot of this stuff down. So do take it. It's free. It's in the link below. So what I'm looking at here is we got 2 degrees of counts, right? So I'm now just looping back and going, is there anything in this pattern that can help us? So we know, so this is where, if you're new to Fibonacci and you haven't taken my masterclass, this is where it's a bit more advanced. We've got 3 counts. We've got a wave 2, we've got a wave A, B, C of a wave 2. So this part is the wave C. And what I'm going to look at now is to dissect this wave C. This part of the wave, it typically breaks down to 5 waves. 5 waves. And if it's identifiable, we want to use that information. And the momentum has given us a clue. We should get one more bullish reversal, as in it goes down and up, potentially, not guaranteed, before this wave C completes. So now let's just really zoom into this part of the market. I want to zoom in to this part of the market here, because this is going to be helpful for us. So when I'm looking at this, we're sticking on the daily chart. I just want to see what the candles look like, because again, I just want to see, yeah, that looks pretty cool. So what I'm looking for now is there a clear 5-wave sequence? And what I'm seeing is I'm paying attention right now to initially this part, right? Because there's a rule, one of the rules, the 3 key secrets of Elliott waves, one of the key rules that you must know is that wave 3 cannot be the shortest of wave 1, 3, and 5. So if we are looking for a 5-wave sequence to the downside, and what I mean by that here is this here going, it's potentially look like a 1, 2, you know, we can consider this as a 3, but this part here is actually shorter than this part here. And Elliott wave rule says it can't be the shortest out of waves 1, 3, and 5. So if this was 3, then this would be 5, but that invalidates the psychology of buying and selling. So that tells me this is not the wave 3. Okay, if that's not the wave 3, then I'm going to do something. It's a bit more advanced. Actually, we're going to do, it's going to be like 4 degrees of counts. But you'll see what I mean here. This is very powerful. But again, everything is difficult in life before it is easy. And this practice, repetition is one of the reasons I created the masterclass, so you can start practicing, because crypto is here to stay. So now let's just look at, I'm looking at this. This looks like to me a wave 1, 2, 3, 4, 5. This will make sense in a second. Bit advanced, because I do some advanced courses and stuff. But you'll see the method behind the madness. Okay, so then this tells me, if this is a wave 1, 2, 3, 4, 5, let me just put this here. It helps me see that it's likely, not guaranteed, but likely that this is actually a wave 1, a wave 2, or a wave 2, either or, wave 2, and then a wave 3, and then the ABC of a wave 4 is forming, and then we should expect one more move to the downside. Oh, I wasn't planning to go this advanced, but this is an intermediate count. But the reason I'm showing you this is once you get used to reading charts like this, you can look for the clues that says what is the highest probability that we can get an accurate wave count so we can see what's likely to occur. Now, we can only do probabilities, never certainties, but it looks pretty healthy like this, right? So looking like this. So now this helps me see that this market might be going through an irregular ABC correction, which is like this, an A, B, C style correction. And if I just make that into a minor count, again, we're working with 4 degrees of counts here now, but it helps us, right? So this is what we're anticipating. If that's the case, okay, I'm getting a bit, we're planning on going this much detail, but I'll do it as I've started. A typical wave 4, let me just get these here, is 38, 52, and 68, 62%, should I say. That's uncommon because that's quite extreme. And it typically also ends in the previous range. So the key and the secret, what most people don't realize, is with Elliott waves, it actually works on all time frames. So if you're looking at a monthly chart, really macro, like a 10-year vision of a price action, or if you're zooming in to literally a 5-minute chart, right? So we want to know that, and these patterns are always, again, expanding and contracting. So here, I'm just looking at this. One of the other key secrets that most people don't know is wave 4s tend to end in the previous range of the wave 4. I know I'm going way advanced. If this is your first time seeing Elliott wave Fibonacci, please take my Anyway Fibonacci Masterclass because I break down more the simple stuff. This is quite advanced what we're talking about here, but it gets more and more simple as you practice. So we can see that we want to be aware that what we're, just so we're on the same page, what I'm seeing is we're likely to get a movement to the upside and then likely to get one more leg to the downside. And that potentially, and it is potentially, because what I want to see is what does the pattern look like on the next bullish reversal. Now, it could take off. It could just take off and, then we got to reevaluate, right? And this could be the end of a 5-wave sequence. This could be a 1, 2, 3, 4, 5, and so on and so forth. But we'll just wait for the next bullish reversal and see. So now let's just summarize for this part. We're going to do a second part tomorrow on where is it likely to go with accuracy in terms of psychological buying and selling behavior. We'll look at the macro most typical. But what we can see here is we've got pattern, which is a wave 1, an ABC of a wave 2, broken down to a 1, 2, 3, 4, 5 of a wave C of a wave 2 potential. So now we've got this really 3 degrees of pattern, which is Elliott wave, saying we're in this likely wave 2 zone, right? Not confirmed yet. And we've got momentum. One of the challenges with new coins, because HEX hasn't been around for that long, is the amount of data that's available. I would normally like to have a weekly chart, and I'll show you what I mean, weekly chart, and have data. It's, so we can see here, actually we might have enough here actually. I didn't even actually often, this is good. This is healthy for us. This is healthy for us. What this tells us, I didn't think we had enough data, but we do. We have some good data actually, and it's pretty clean. Look at a weekly chart. Just go into a weekly chart. This is an extra bonus. Is this low, when the blue line crosses over the red, marries up very nicely with this low over here. And then this line, the blue has now crossed over the red, which says the momentum is up, and it's in this zone. And once you get a weekly bullish reversal, if you can have 2 momentums in your favor, so now we can go back to the daily chart. On the next bullish reversal, if it coincides with pattern and price on multiple degrees, then it's a very, very high probability setup. So there you have it. That is the HEX current position. Looks like a wave 2. If you want to learn more, take my Fibonacci and Elliott Wave Masterclass. If you click on the link below, you'll go to this. There's a very short video I've created over here.
Thank you for checking out.
And then click on the link. Once you click on the link, you'll be taken to this page. And you can just sign up. It's immediate access. We created a video on demand, so it's convenient. And I'll literally cover what I said here. I created this a little while ago. It says Elliott Wave and Fibonacci Masterclass, how to read the markets like a pro, hosted by myself. I've been trading Forex, like the markets, the currency markets, and I was featured in this book in 2008. And what I learned was how to read the markets in an objective, mechanical, non-emotional way, which gives you a massive edge. Because even when we're looking at HEX, especially when there's such great advertising, it's hard to know when is a good time to buy and when is a good time to sell, because the price is going up and down, but the market is consistent. Like they're on NASCAR, they're doing a lot. And the founder, Richard Hart, is great communicator. I've seen a couple of his videos, great communicator. But when it comes to just pure price action, that's irrelevant to a certain degree. But the fundamentals and the technicals tend to line up, but we want to be paying attention over here. So take the free Elliott Wave Fibonacci Masterclass, enjoy it. And if you like it, hopefully you'll join one of my courses and you can be invited to my private Telegram community. We do live workshops. We've got a live workshop today. But tomorrow we're going to cover part 2 of HEX, which is, okay, we said wave 2. And if it holds and converts into a wave 3, we want to see what is the high probability price zones for a wave 3, how we can create that and calculate that in advance so you can anticipate as opposed to react. All right, let's finish on a quote. We're going to finish on a quote today. Today's quote is chapter 3 from Confucius. It does not matter how slowly you go as long as you do not stop. It does not matter how slowly you go as long as you do not stop. One step at a time. Everything is difficult before it's easy, but it's our job to know that the trend is your friend, ride it until its end, until it reaches its bend. And using these simple skills, once you learn momentum, pattern, and price, how to really read the markets ahead, so you can anticipate end of a trend. So we're looking for a trend, wave 2 trend reversal for a wave 3 takeoff rocket. And wave 3 tend to be the most impulsive. So if you like today's content, like, subscribe, hit the bell notification, and I'll see you soon.